hold your peace. I think it. What does it
You
say?
are on YouTube, my dude.
All right, thank you. All right, here's what we're gonna do. Actually, I'm gonna go back to it. Deanna is going to invite Shadow Trade members, and we're gonna do some live trading for the last 30-ish minutes of the day. And I'm gonna clean up my computer because I got a million things on all 4 monitors, and I want to get it all organized. So let
Do you want
me.
Shadow Trade or do you want me to just invite everybody?
I don't know. That's a good question. I would do Shadow Trader. I
Okay.
just want the, yeah,
I'll
I don't
send a
want to
text
put
out
the
real
whole
quick.
shebang.
Yeah.
So we're gonna do that. If you're, or you could just use the same webinar link, maybe.
Yeah, that's what I'm using. I just need to snag that link.
Yeah. Yeah, Mobileye, I sold that one ahead of earnings I think it was the other week or so. Yeah, we sold that one though. Some of the trades, the bonus trades, we don't give updates on unless you're in the option pit and stuff like that, obviously. Virtu puts, that's a VRT puts, that's a what do you call it? One of the AI related stocks, VRT. All right, Deanna, do that. I'm going to run downstairs and use the wash. And what we can do is, are you just keeping everyone on this?
Yeah, I was just gonna keep everyone on here.
Are you just keeping on the same? Do I have to log off different webinars or anything like
No,
that?
no. Just pop your camera back on. You're all good.
All right, so what I'm going to do is find the link. I'll post the link one more time, last chance,
Here,
and then it'll be gone forever.
I'm gonna kick your screen off. Jono, you can take the screen again with the deck, and then when he
Here,
comes
I'll do
back,
it. I'll do
we'll
it.
just pop it up. Oh, I just said
I'll do
okay.
it. Don't worry. All right, I will be back
Have a
in
day off.
less than 5 minutos. I don't know. Do I have the screen or not?
No, I kicked you off. You have to reshare.
Okay. Where's my screen? All right. I will be back in 4 minutes, and we could get through all the market chaos together because that's the funnest. And we could pat ourselves in the back for not buying Tesla at 420 today, because now we're all saving millions of dollars. Now, well, maybe not millions of dollars, but we're saving a lot of money. Thank God we waited. Woo. So you may be saying, Lance, you were so conservative. And I'll be saying, yes, I was. And it's paying off so much. Thank goodness. All right. I will be back in 3 minutes. You know what we're going to show? We're going to have, we're going to have, no, I can't get anything to hold it. All right. I'll be back in 3 minutes. Ooh, Baba. Babita. I love
Aren't
Baba.
you gonna go instead of trading?
Yeah, but then I saw Baba calls and I said, ooh. Where's the light? Oh. Let's get ready to rumble.
How excited
Ready?
are you for this weekend?
All right, I'm out. This slide deck is over. Time to get to the business, shall we? Parax. Do not take. Holy mackerel. What a weird order. Prax Precision Medicine. Is this a buyout? Probably. PDUFA date? So Prax is implying a $30 move? Nope. All right, let's go to EA. Because this is the $1 million trade. And when I say million, I mean million. All right, where's the chat? Chat. Where are you, chat? I already lost you. Excuse me. Where's the chat? Lumen. If you want to get 12% in Lumen, boring. Take the risk. What's the worst? It's a 55-cent option. It goes to zero. All right, let's go to EA. Where's the master indicator? I don't want this on my charts right now. All right. Let me change this chart, some goodies. NVIDIA puts, oh my God. NVIDIA goes to 80 by October. People will be crying. Look at this move here in EA. Where's the gap fill? There it is. There's the gap. All right, so let's talk about this EA bet because it is the biggest bet in all of professional trading, at least in the afternoon. EA. Oh, it's showing me. There we go. EA. So the trader came. Let me make sure I got the chat. So the trader came in EA and bought. Where's the chat? I just had it. There we go. Test the entry after this pullback? No. All right, I think I got the chat, right? Is your screen on? Is my screen on? I changed my shirt. Can you tell? Is the screen on? Yes. Can't see you. It's because I'm in the dark?
No, you were good. You were good. Well, now you're good. It's their computer.
Wow,
they're
that's a big bet in Rivian. Oh, man. Woo! Wow. All right, let's go over EA. We got to take it step by step because the scanner's messing up a little bit here. All right, let's talk about this EA bet. All right, I'm going to show y'all exactly step by step the trade, the order, and all that jazz, so you can get the full details, so you can be informed and all that jazz. All right, so let me pull it up for y'all. All right, I don't know why it keeps defaulting to the screen. All right, so here we go. We got EA. The trader came in, bought the February monthly, so February 21st. Why do I keep getting all these triggers? I don't want that. All right, there we go. The trader came in, just bought the February monthly. So February 21st, 120 calls. So these calls are, I got to switch glasses because I can't see when I'm looking at the colors. So the trader bought the in the money. So in the money, the 120 calls are about $3 in the money. They also, what does EA have upcoming? The earnings event on 2/4. So that's next week on Tuesday after market close. So if you want to be super risky, a true degenerate, which I don't blame you, you could always do the next week calls. What are these 11,000 of the 130s for next week? Let's go ahead and take a look what this trader did, because this trader is really threading the needle. If they did 11,000 contracts at the Feb 130s, that's $1.3 million. So let's go ahead and look at time and sales. Now, most broker platforms will have this. You don't need to know any of this, but I'll just show you guys the nerded results. EA has traded 48,000 calls today to only 4,000 puts. So it's running calls versus puts 10x the amount of calls to puts. TOS has a sizzle index. I call that unusual. And we go down in time and sales so we can see exactly what the trade was, because don't y'all want to see it? Let's go ahead and look at it. These were all part of a spread. Spreads for earnings usually don't like in terms of direction bets. I like spreads, but not in terms of direction bets. So it looks like the trader, and it's a little messed up here. I don't know why. But it looks like the trader legged in these as part of a spread, which is kind of weird. But anywho. So we don't really care about the spread part. I would love to see the other leg of the spread. Looks like they did the... Oh, I found it. Oh, wow. This is insane. If this trader's right, they're going to make a killing. So the big trade was the Feb 120 calls. The February monthly 120 calls. They bought those at 610, it looks to be. Yeah, 610 as they paid. They bought these clean on the ass. They bought 598 contracts, 360 contracts, 172 contracts, 150 contracts with shares at 122.96. The shares are now 123.08. But the also, so I actually found out what this trader did. And this trader is gutsy, ballsy, some big craziness. This trader did 11,000 of the next week 130, 135 call spread, and they paid around 90 cents. So that trader is risking about $400 or $90 per contract to potentially make $410. And they did that 11,000 times. So that trade alone is right around, let's just say $1.1 million of call premium. That's big. So that trader is putting their top level at 135. So that is an insane trade. If that trader is right, they're risking 90 to potentially make 410 in the next week options. Why are they doing next week options? Because of earnings for next week. Wow. And what is the implied move for earnings in EA, you might be wondering? No, they can manipulate anything, Joe. You know, there's no certainty ever. So if we look at the gap, not only do we have a gap filled about 140, why did EA sell off on 122? Anyone want to look that up really quick? If not, I will. Show you guys how to look up prior news really quick if you want. Just go to FinViz, look at the news headlines, 122, that's January 22nd, scroll down. They cut their forecasts. For soccer? Who cares about some soccer team? All right, here we go. They cut guidance, analysts issue downgrades. So when analysts downgrade a stock, what usually happens to the stock? It goes up. When analysts upgrade a stock, what usually happens to the stock? It goes down, right? So that's good. So this trader, and the reason why I like the trade so much is the trader bought in the money calls. So being a spectator, if someone wanted to speculate a lot, they would buy out the money calls. By buying in the money calls, they're basically saying they are willing to own the stock at 120 a share plus the price they paid, so 610 technically. So technically that'd be 126 per share is their break even. So it's only about $3 higher, and they're willing to own, how many times did they do that? 3,000 times, was it? Let me see if I can pull it up here. So 3,000 times, each option represents 100 shares of stock, so that'd be equivalent to, where's my time and sales? I just have you up here. They did 2,813 contracts. Let's just say 3,000, make it easy. So they did 3,000 contracts. So if they're willing to take in 300,000 shares of stock, 300,000 shares of stock to the current share price at 123. Oh, shit. 300,000 shares of stock at a current stock price of 123 is about 36 million, let's just say $37 million worth of EA stock. Woo! So can they be wrong? Oh, of course. If they were right, it'd be called winning, not investing. But that's good probability in math, isn't it? So I like that a lot. That's why I went hooting and hollering and stuff when I saw it come across the tape. That makes sense? I can't get a limit at the 120. They're 610 by 630. So current last price was 620, 613, 620, 626. There's time and sales for you right there. Everyone good? iPhone. Good. Can you do the 130s? You could do whatever your heart desires. If you want to do cheaper options, yes. Or what you can do if you want to get super risky is you could do the next week options. Like you could do the next week 130s or 124s. The next week 130s are very, very liquid. Like let's say you want to do the next week 130s, you could probably do them at $1.30. You can do next week 130s if you want. Those are going to be a lot more riskier, obviously. Right? But they're going to move higher from percentage level. Like to give an example, EA, the February monthly 120 calls are up 85% today. The next week 130 calls are up 188% today from a mark-to-market count, right? So you could do whatever your heart desires, but the shorter dated expiration and the further out of the money you go, the more risky it's going to be though. So just, make a little note of that as well. All right. Look at all these. I think I have so many charts that I don't even know what charts I have on my platform because I did so many webinars. So if you see a lot of things going off, I don't even know what they're from right now because I got like 10,000 charts up. RGTI, it's a quantum computing stock. Those are going to be hard to trade just because of Google reports earnings next week and Amazon. So they're going to have huge anticipated moves just in case Google or Amazon say something on the quantum computing names out there. Just like, was it NVIDIA crushed them a few weeks back? So those are going to be very hard. The February monthly. I'll post it in the chat real big again. EA February monthly is always going to be the third Friday of the month. So February 21st, actually 21st, not 21st. Wow. And you can see right here too, in real big too. They're currently about 620, 615, 620. Put it all big and bold, easy to read. SQQ is up from the earlier session today. It went from down 3.5% to up 1% on the day. Talk about a reversal, huh? That's a big move. All right. What about the 214, 125s? Yeah. You again, any exposure. You want to go cheaper, you want to go further out the money, you want to do a call spread, all are totally fine. The one thing is you just want any exposure to the stock ahead of earnings, any upside exposure. You want to do the common stock, you can do that. Any kind of alternative is fine. Got that? Good. Any kind of exposure is A-okay. A-okay. All right. Shall we move on to the next or look at the next? If I can find all my stuff I have on my computer with all the screens. Shall we move on? All right. I think we shall. Yay? Give me a question, or should we move on? Or if anyone needs to go over anything, we could go over as well. Whatever your heart desires. Or Deanna, if you see anything in the chat that I missed, let me know. And I keep getting a million alerts, and I don't know from where.
It looks like everyone's good to go for the trade. If a question pops up, I'll just kind of interrupt you.
Can you repeat that? Sorry, I didn't hear you.
Oh, you're good. It looks like you are all good to go. If something pops up, I'll just interrupt you.
Okay, good. Yes, feel free to interrupt. It is not rude at all. Or if you write in all caps, it will stick out even more. All right, let's see what else we have here. On Tasty Trade, how can I add contract to my current EA trade? You should just be able to go in like any other broker platform and pull it up on an option chain. It's a monthly option, so it should be available on every broker platform. Linda has a good question. EA, February 21, 2025, expiration 120. Oh, there we go. Of course. Let me just confirm. I'll go on my Robinhood and see if it's available. We've got your back. We'll use what? To make sure you don't lose your gold perks. Okay, yeah, whatever. That's fine. Let me just look here. EA stock, Electronic Arts. I want to do the option. I want to do the February 21st. I want to do the 120 call. I want to continue. Let's try 620. The bid ask. Review order. Deposit funds. Oh, this is my stock account. Where is my funds? Oh, I was up money, and now I'm down money. Wow. Talk about dependent on the market. Well, I guess I can't Robinhood, but it's available on Robinhood. Yeah, it's available on Robinhood. Yep, that's fine too. Yep, that's good, good, good. No, it's the same thing, Cleve. The raw Netflix is just the where they show it now compared to it was on USA Network before. Oh, Linda, why do we look for volume above open interest? Very good question. So let's look at that in a trade. Let's actually just look at this Lululemon for that question, Linda. So let's go to Lululemon. This is June 2025. Wow, it's a long way away. And this is the 310 puts. Okay, wow. So they're 575. This is probably a hedge on the whole tariff stuff. So you see how volume is 418, open interest is only 174. When volume is above open interest, it's indicating it's a new position. So basically the trader is making that market for it. And the reason why we look for it is if volume is less than open interest or even equal to open interest, it can mean that the trader, maybe they sold an option in the past and now they're buying it back, right? And if they did that, if they sold the option, now they're buying, let's say, the put back, that's not necessarily directional. So we always want to see volume above open interest. Got it? So volume versus open interest indicate a new position. So let's go to this Costco real quick. The next week 980 puts. So what is this probably again? The Costco February 14th. Probably a hedge. Why? Because of all the tariff stuff that we've seen lately. Costco, obviously, a lot of items in China. So you see how volume is greater than open interest, indicating it's a new position. So it could be a hedge against could be a hedge against the inflation or the tariff news. So that's why you're probably seeing some retail put buying right here in these two. Probably just protecting. Both stocks have had big runs to the upside lately. So you're going to have traders go and pay for some protection over the weekend, hoping, hey, hopefully there's no mumbo jumbo and no funny business with the Trump and tariffs. You know what I'm saying? And then if the mark, let's say, so let's look at every case scenario. Let's say you do have no tariff news over the weekend. What's probably going to happen to the market on Monday? Probably going to get a big gap up, right? Because there's no more unknown. Apple little bounce here, we call it dead cat bounce. So you're having traders go into the weekend hedging their books. So we pull up, see where you see all this bearish stuff? Hedging their books because they're probably saying, hey, let's say we own Costco, we own Lulu shares. We need to have some hedging on, hence hedge funds, into the weekend. So we're going to spend 170, 200,000 bucks hedging our book in case we do get some kind of, tariff news, hitting the markets and stuff like that. So that's why you're seeing, some put buying and especially some of the stronger stocks. Now, if it was a stock at a 52-week low or something like that, you're seeing put buying, then it would be a different story, I would say. Prax, I'm gonna look at it. I like those odd tickers. Prax, the Feb 95 100s and March 100s. Oh, this is that pharma name. Yeah. So Prax, yeah, Prax has I'm assuming a PDUFA day. Yeah, they probably have some PDUFA drug trial, hence the $30 implied move, $17 implied move. Really $30 if you had at the money calls and puts. Yeah, so I mean, you can take it, Prax, but you're really, I would say, rolling the dice that the data is good. And they're very expensive options. So me personally, I would probably pass. Prax Precision Medicine. But if you look at the options compared to the stock, obviously these traders are leveraging the options instead of doing the common stock because stock barely trades. Right. But yeah, good. Yeah, I saw that in Rivian. Thank you for mentioning that up, David. I saw that in Rivian. That's a big order in Rivian. Yeah, that was a real big order in Rivian. I think I was on the webinar. But yeah, I saw that. I like that in Rivian. Rivian has a huge short float, meaning it can squeeze. The trader bought the March 11s for 1.3 million in Rivian. When do they report? Stock had a big pop on it too, right? Yeah, right here. Stock's been holding up well despite all the General Motors getting hit. So that's the March 11s and the money calls, 4 cents wide. It's a good order. When do they report? February, probably 20th. Yeah, volatility jumps from 77 to 92. So they probably report in the February expiration monthly. So you have time. I don't think you have to get in today, but what's the short float in Rivian? It's got to be huge. Probably what, a couple bucks or a 15, 20% at least. Oh my God, I'm getting ads. Short float, wow, almost 20%, 19.34% in Rivian. Wow. Yeah, but again, it doesn't, I wouldn't get too caught up in chart patterns. I'm going to add to TKO one more time here at 5:30. So I added to TKO. I accidentally did the February's instead of the March calls, which February does not get earnings in TKO. March does. I accidentally did the wrong expiration. But yeah, chart patterns don't really matter for earnings. And what I mean by that is if you look at Apple, chart looked good, and then now the stock's red on the day. So for earnings, at the end of the day, it's a binary. I wouldn't get too caught up in chart patterns or anything like that because it doesn't, none of that really matters for earnings. Usually stocks with the worst charts go up on earnings. Stocks with the best charts go down on earnings. Some Google calls. Yeah, added more TKO. Again, I did February. I screwed up. I wanted to do March, but I just realized, I'll show you here. I thought February got the earnings, but really they changed their earnings date yesterday to February 28th instead of February monthly. Hence why the options are so much down today is because they changed the earnings date. So implied volatility got sucked out of the February options. So the March options are barely even moving, right? you know, they're barely down, but the February's down a lot because of the the volatility change, and implied volatility just got sucked out. So that was my mistake. Rivian, the order that hit was the March 11s. I'm not taking them though. I would rather single it out for earnings and just wait till earnings. Playboy, yeah, I've seen that one back in the day too. It's had a big run up. They've had a big it's a penny stock, but they had a big follow through. Some Google calls here last minute. Google does report, wow, this trader's crazy. Oh man, look at this trader. What a nut. Goog 222.5 calls. Oh my God. So this is when do these expire? February 14th. $1.75-ish. So Google reports next week. What are they hitting Google? And they did the Google calls. So they did Goog and Google. So this trader is doubling up for Goog earnings next week. This is insane. I would not do the February. Where's my option? There it is. I mean, who am I to say? If I wanted, I would probably do the next week Google calls. So what's the implied move in Google? $13. 13 plus, let's just say 205 would give us what? 218? Right? Yeah. 218 would be your upside bull target. These traders doing, what was it? The 222.5s? Palantir seeing some repeat calls for earnings next week. Palantir repeat calls for next week. I would look at them next week. Google, probably want to get long Google for earnings. God, these traders are nuts though. So they're basically saying Google has a greater than expected market makers move, which could happen. That's a big bet in Goog. Very big bet in Goog. We're seeing a lot of Goog bets. More Goog. Gosh, darn. How do you get short Google for earnings? You can't. More Goog. The 225s. Wow. That's hard to say no. Goog seeing the February 14th 225s and the, was it the 222.5s? And the 222.5s. My God, look at all the orders hitting. App calls for meta calls. They're just coming in and call buying like hotcakes. Wow. I mean, this is some degenerate stuff here. These are some degenerate traders. They're just trying to get anything. I mean, I think you got to probably take Google long for earnings. I don't know how you bet against it. App calls, February 450s, Google calls. I think next week we got to get long Google. I think you have to play Google long for earnings. If you want to get it now, you can. They're pretty cheap. Oh, he's got 5 seconds left. Baba calls too. Everything's February 14th. Weird expirations. There's a lot of bull bets there at the close. Look at those. I mean, those bulls went crazy. Meta, App, Goog, Baba, Sunhound, Snowflake. Snowflake. They report? No. Strong chart, though. Right? They don't report. They don't even report. So all these internet software companies, Snowflake, AppLovin, just crazy bulls and all out the money. So these are what we call high risk, high reward trades. They have a very cheap options because they're far out the money and short dated, but a big potential home run. Palantir also gets earnings next week. So you could have today just be a one-day sell-off thanks to the tariff news, and then next week they run up everything again. That's what it's looking like. It looks like they said, screw the tariff news. It's not going to matter. And then we're going to rotate right back into tech. Wow. That was some crazy flow at the end of the day. The amount of Google calls has been nuts. And the chart, again, it's a honey badger. It doesn't even care what the market's doing. So, and you have Amazon, but Amazon's been a little bit light. So the Qs were barely down today. That's a big win. You had Apple sell off so much, Qs were barely down. Nvidia still hasn't came back, getting crushed again off the Avgo had a good bounce today. Netflix, still holding up well, flagging post earnings. You got a lot of good in the market. Spot VIX is not even moving. The trend is mid. The tick closed bullish. ADD line was horrible today because obviously most stocks sold off thanks to Apple. Apple and Intel both were crappy, but I mean, if you're a bull and you see all this flow in big cap tech, it's hard to ignore. So we'll see. I mean, just some nasty intraday reversals. So trade small. Tesla came a penny from 420 and then pulled back $16. I mean, some of this stuff's brutal, but just stick with it. Nothing reports Monday morning. Everything's gonna be Tuesday after close, Wednesday, Thursday. So you got tons of time. Again, if you don't want to take the risk into the weekend, just wait. The good part with Google options, if they work towards you, they're not going to move much. What I mean by that is, if you look at the options today, the stock was up $3. That's a big move for Google, 1.5%. If you look at the options, they were barely even up today, 20%, 17%, 25%. So they're not going to move until earnings. So let's say you're wrong and Google gaps down $3 on Monday. Let's just say Google goes down 3 on Monday. These options are probably going to be down 15%. So, not a big change. Very, very minimal, right? You're not going to have a big fluctuation. Did I make money in EA today? I don't know. I don't look at it. Why? Because earnings. So, really there's nothing to do in EA. You wait till the earnings event. That's the big money mover, right? All this intraday action, you're just going to go crazy watching it. The options are down 10 cents. So basically the bid-ask spread, 1%. But yeah, we're not day trading anything. Maybe a weekly option we day trade short term, but everything that we've been doing, BKR, we day traded it because calls went up 35, 50% yesterday. But everything else, we're going to play for the upcoming catalysts. So a rally into the earnings where you get implied volatility up or down, like Lumen went down pre-earnings. If they go down, let's say 30%, we'll take some profits and stuff, but not 10%. That's nothing. You want to hold through the earnings because that's where you get the big money, is by getting that big move. Your calls to the upside, puts to the downside. But if you're, just trying to scalp 10 cents, 20 cents in a $6 option or something, or getting, 5, 10% in an option, I mean, you could do that. Just me personally, I want to try to hit the big one. I don't want to, scalp for pennies, so to speak, out there. How do you come up with Tesla 420? Good question, Tebow. Basically, that was the implied move for Tesla for earnings. So 420 on Tesla, when Tesla reported, the market makers were implying about a 30, technically it was around a $33 move, but let's just say $30 move to make it easy math. So with the stock at 390 plus 30 equals 420. So that's where they were hedging themselves, the market makers at 420. They needed to protect it, and boy, did they do a good job, right? They got up to 420, 419.99. And then anything over 420, they would have to buy stock for the short calls that they sold. So I know, crazy how they did this, but if you look at Tesla, the way it traded all week, I know everyone wants to do it, so do I, trust me. But if you look at how it traded all week, we take out the earnings, after hours, I should say. Here's how it traded Monday, or here's where it closed last Friday, and look where it closed today. That's a bad line. This is where it closed last Friday, and look where it closed this Friday. Literally to the dot. So all this is just computers. That's it. And you saw that too. I mean, even with the overall market this week, like you saw yesterday, Trump tariff news, Tesla sells off $8. Today, tariff news, Tesla sells off what, $16 or whatever it was. I mean, it's just until the options die down, which today the stock was up 1%. The options were up, 4%, 5%, 3%. Until they crush implied vol and make these options cheaper, you're gonna continue to see this because the market makers are going to continue to jack up the price of the options. And to be fair, because you are seeing lots of volatility, that does kind of make sense. But yeah. How do I get market maker move on my screen? It will only appear DW Gator if a stock has earnings upcoming. So what has earnings next week? Amazon? So it will appear that week of I'm trying to think if something has earnings like Monday morning. Pins. No, it won't show it. AMD. Yeah, it's not showing it. So usually if a stock has earnings, so it will appear if it's so like Monday for the names that have earnings this week, it will give you here triple M. That means market makers move. Or what you can do is add the price of the at the money calls to the at the money puts. So like Susie says AMD. You see how we don't see anything here? It just says NASDAQ, blah, blah, blah. So what you can do is AMD has earnings next week. How do we know? Volatility goes up from 70 to 83.5. So what you can do is go to AMD. You go to the at the money calls. The stock's at 116. We'll go to 116. You add the calls. So they're 530. You add the puts, which they should be right around 530. So 530 plus 530 equals 1060. That's what the market makers are implying for AMD earnings, about a $10.50 move. So all the market maker move is the price of the at the money straddle. This is for the end of the week. When it gives you MMM here, that means specifically for the earnings event or the catalyst if it's like a biotech company or something. So this is for the whole week, depending on what expiration you move. Market makers move when it displays it is for the earnings catalyst. So like Apple was about a $9 move, and it was up right around $9 at its peak, and then reversed and went red. No, EA is earnings, no Super Bowl commercial. The one name that has a Super Bowl commercial, if you want to play it, is Hims and Hers. Oh wow, it's up 9% today. Wow, this stock doesn't care. Was it? They already announced the Super Bowl commercial this week. I wonder if it was something to do with the RFK Jr. Wow, it might be. It might have been something to do with him. Hims and Hers makes like the you go buy like the balding, weight loss, anxiety, all this kind of medication online. I think like telehealth, I think it is. Stuff like that. All right. Did I cover everything? Warped option. The reason why we didn't do too much except CVS earlier in the week was because of, quite frankly, all the chop action that we saw. But yeah, that's the only reason why we didn't get too active with it, is because every day it was, well, I mean, literally it was a new gap, higher or lower. And I just didn't want to ruin the winning streak either. By just doing a trade to do it. But yeah, if you look at overall markets, again, we really didn't trend all week. Monday we had a big gap down. We retraced it, then today sold off. I just haven't been really for any program very active, except doing earnings. But the market, just no trend. Not saying we need trend for it to work, but with heightened volatility with like Apple and all those big cap names, to be honest, I just didn't trust really anything. I still don't. Really. But next week, once we get past Google, everything's will really start dying down and stuff. Even like energy, I really liked, and then I didn't really like, I shouldn't say, but I like select energy stocks. And then if you look today, like XLE, they just puked lower, even though you had like BKR up. Well, it only is at 3% now, but just real nasty moves in the market. You know, when you have Intel pop, Apple pop, then they go red. I mean, it's a roller coaster, and there's no way about that. Or even Baba. I like Baba a lot. You know, we had Baba calls for quick flips, and I got out that day. You know, and then it kept going higher, to be fair. But you know, let's say we would have did a call spread in Baba yesterday, it would have been great. But will we have got 50%? Probably not. And then today it just gave back, I mean, literally almost everything yesterday. And that's what I mean. Everything that I really liked was either a day trade or you just really had to get in and get out, and that can be difficult. I mean, there's no doubt about that. Because they were so far out the money, Susie. Yeah, because it was so far out the money. That's why. It didn't exceed the market maker's move. I think it was like $44 if I'm not mistaken. JetBlue closed out today on the pop. You know, it was up like what, 70% or something. So, you know, anytime you get up 50% more, trim some profits. And it didn't take long. You know, it took what, 2 days? And was up what, 10% today. I sold it up here. I got 83, and then they went up to what, $1.18. Jesus, wow. But yeah, always at least trim and trail. Like you get a pop 30, 25, 30% trim some, you get up 50% trim some. If you want to leave any on, you can, but you know, don't get too greedy with it. Where are they at now? Just curious. 75 still? Wow. I sold them at 83. Jeez. Did I get filled 83 or 80? 70. 78? Well, what did I sell them this morning? I didn't look. I was doing a thing. I just wow. I should have held on. They traded up to 118. Well, now I feel like a donkey. I got a horrible feel. How do you trim? So let's say you do, let's just say 10 contracts. Put, let's say, a 25% profit target. So you buy at $1, you sell at $1.25. Let's say 3 contracts. Then they hit 150, so they're up 50%. Sell 3 contracts. So now you got 4 contracts left. Let's say they go up 100% or 75%. Sell 3 contracts. Then you could leave one on, you know, either till the earnings or till the expiration. But you have to understand, as the options go up, so let's say you buy 10 contracts at $1. So that's $1,000 of total risk. Here, I'll put it on here. So 10 contracts at $1. That's $1,000 of total risk. So let's put the risk. Okay. So let's say those options are now at $1.50 marking. And options are a mark-to-market count, meaning it's going to display your P&L to the current price. So now you're up $500. Your total risk has gone up from $1,000 to $1,500. So what you can do is, let's say you now have you want to sell some and take some of this money off the table. So now you sell, let's just say 3 contracts at $1.50. That's $450 back into your account. You trimmed $450. So you basically took almost all your gains and trimmed it, right? So now you took that money off the table. Now your total risk has gone right back down to right around $1,000, really $1,050. So now let's say you don't trim, and that 10 lot went from $1 to $1,000 of risk. now that 10 lot is now $1.50. So it's marking 1,500 bucks of total risk. And let's say doomsday happens and the options go down 50%. Ah, sad face. So now you're not down 50% on 1,000. You're down 50% on 1,500 because that was the last mark that the options traded since they were at $1.50. So now you're down 750 bucks, not 500 bucks. And then you're looking at it and say, oh, how am I down so much money today? Because they were already up in value 50%. So it's just good gauge, or what you can do, is do 3 contracts and sell one. So let's say you do 3 contracts. I should just get a blank piece of paper. Here, let me do that. Let me just get a Google Doc. I think I have this somewhere, Deanna, under the risk profile for Shadow
You mean
Trader.
the doc that you sent me like 2 days ago?
Maybe. Let me look. But oh, here we go. Yeah, there's a video here on risk management. Let me see if I could just copy the link. Oh, good job, Will. 100% gains. Well, see, better than me. So let me go here. Okay, so let's say, shoot, I forgot what I was saying. Okay, now I remember. Let's say you buy 3 contracts at $1. 1 to sell at 125. 1 to sell at $1.50. So 25%, 50%. And now you have 1 contract on. What you can do is aim for 100%. So 1 to sell at $2. Or you can keep the 1 contract on to hold into expiration or the catalyst. It could be earnings. It could be maybe an FOMC event, something like that. So you're keeping this one as a runner. And the reason why you keep it on as a runner is you try to get some larger upside out there. But I would recommend maybe doing, if they're cheap options, maybe doing 3 and they're just setting some price targets out there. Like a warped option, we go for about 50% on the warped option spread. But you can do obviously less amount of risk. Or you could do that same with instead of a warped option, an outright call or put with 25, 50, and 100%. Or a simple way, if you like maybe holding on and you want to shoot for bigger gains, let's say you buy 3 contracts at $1, sell 2 contracts at $1.50, so 50% gain. Sell 1 contract at $2 or 100% gain. You can do it like that too. Or let's say you have 3 contracts at $1, sell 2 contracts at a double, $2, and then hold 1. For a runner. Just to see, hey, what's the more potential upside that you can get? So there's 3 ways that you could set your profit targets out. So setting profit targets on small lots. So this would be conservative, moderate risk, degenerate. Or we'll call it lotto ticket. I usually don't like the trail, or what you can do for a stop loss is use a 50% stop loss. If the option is over, I would say $5. If it's an that sounds too rich if you have a small account. And let's say an option's over $2, use a 50% stop loss. Stop loss is over $2, use a 50% stop loss, aka if, and we'll put if an option is a stop loss on a $2 option would be $1. So stop loss is something that you can do. If I only really like stop losses on expensive options. If they're cheap options like $1, $1.30, $1.40, $1.50, I mean, they're so cheap to begin with, you're not risking an arm and a leg for it. Is there a way to use a stop loss without being flagged as a pattern day trader? Yeah, Chris, you can use a stop loss. Just don't do it intraday. So if you buy an option and it hits a stop loss, let's say intraday, then that would be flagged as a PDT. But there really shouldn't be any reason unless you're doing like SPY or like NVIDIA weekly options to where you would use a 50, where the option would move 50% a day. That would be more day trading. Yeah, or that's another point. I personally, though, I can't tell you the amount of times I bought an option. Let's just say at $1, it goes to $1.50, and then it goes right back down to $1. I usually don't, unless as long as the option is still holding an open interest. I usually don't. If it goes back to $1, I'll usually add, to be honest. Or if it goes down, I'll usually add. Not, say, oh, the option came back down, let me get out. In the short dated options, because they're going to be very, very sensitive. Maybe Deanna, we could put this somewhere in the members area or something.
Yeah, just send it to me and I can post it somewhere.
I don't know how to spell beginners.
I'll fix it. I'm just going to save as a PDF and post it in the
beginners.
Happens.
All right, what time is it? 4:25.
Yeah.
Wow, it's pretty late. All right.
You want to kind of like wrap up and
yeah, because I have to go to the movie. I have to go see Companion movie. I think it's
okay. Cool. Then I'll get this posted. We'll schedule another one of these sometime next week. So yeah.
Yeah, we'll try to schedule maybe ahead of Google, Amazonia, all those big names out there.
Okay.
We'll try to do something.
I'll send you a few dates and you can kind of pick whatever you want.
Yeah, I think
I mean, I have to look at your schedule.
Yeah,
so,
we'll just look at the schedule.
Yeah,
Monday.
I'll get off and I'll send you some stuff.
All right.
Okay. Bye.
I think we are good to go.
Coolness. Bye.